All right, good afternoon, everybody. It is September 13th, 2022, and boy, was it a wild day on Wall Street. The NASDAQ, the Dow Jones Industrial Average, and the S&P 500 all falling. Oops, sorry, hold on, I gotta do one thing. I forgot. Sorry about that, guys. I'm in the middle of multitasking here. But it was a bloodbath on Wall Street. Really crazy day. And that is due to a higher than expected inflation print. So we did get that headline CPI coming in at about 8.3% year over year. Month over month came in at about 0.1%. Core CPI, which is the more important indicator that we like to watch, mainly because that is the proxy that the Federal Reserve uses in order to set monetary policy. Now, the core CPI excludes very volatile food and energy. That rose about 6.3% year over year, well above many analysts and economists' expectations on the street. And it also rose about 0.6% month over month. So there's not really too much good news in this report. I was actually quite disappointed by it. But I don't think it was a surprise to many people, as we know that the inflationary pressures are really ramping up here for multiple reasons, obviously due to the supply chain disruptions, massive money printing, and I would even say decades of easy money and easy monetary policy. But I think, something that's good news is that in July, the CPI, that headline number, was 8.5%, and now in August, that headline number is about 8.3%. So we are seeing slight deceleration here. But as we all know, as we've been talking about almost ad nauseum on the stream, the reason for this is because oil prices, gasoline prices have been falling off a cliff, which is good, which has sort of offset a lot of those price increases as it relates to food, shelter, and the like. But on the other hand, as we look at that core CPI, we look at food, record increases in food, shelter, and medical care costs, all rising to offset the decline in gasoline. So we'll talk about that. Another thing I want to get into tonight is forward projected earnings for the S&P 500. So analysts across the board have cut their estimates for Q3 earnings by about 5.5%. So if we think back to the last time analysts cut this much, it was Q2 of 2020 during COVID. So I think there's going to be a lot to talk about here. We'll talk about forward PEs, what should we look at, different valuation metrics, and then we will end the night, my friends. So let me just put away my laptop here. And we will see who we have in the chat. But for right now, I see GX72, I see Vonda Howard, Big Task, good to see you, Raphael, Sally, Chef Stan, Amanda is here, British Gray, FredX, Sunshine After Rain, and Jay, good to see everybody. Let me just pack up my backpack here and we will be good to go. I see Elliott Wave Review, Gothamist, welcome. Yeah, we've been starting these live streams off in the office, mainly because I've been having extreme issues with my computer. So my computer will only work when it's plugged in, but this is the WeWork on the corner of Canal Street and Broadway. So we will be starting off the stream. I think I see a Tesla taxi outside too. So this is the office near Chinatown, Canal Street. But we will head downstairs and then we will call it a night and we will get started on the live stream. All right, team. Eve is here, Bernard Friedman, Deborah, good to see you, Deborah. Sunny D is here, says cool office looks great. Welcome, Sunny D. I see the one and only Gigi NYC. Big tasks is last one out. I'm always last to leave the. Got to burn the midnight oil here. Andrea's A is like community adjusted office. So everybody, tonight we are going to be talking about the CPI report or the inflation report. Really horrible stuff here. Now, you guys know me, I tend to be an optimist, but I think we need to be a realist tonight on the stream, and we're gonna do a in-depth breakdown of this CPI report. Now, if you remember the live stream from last night, one of the things I said is that consensus on the street is for that headline CPI number to actually come down a little bit. And the reason for that is because the headline number includes very volatile food and energy prices that have come down quite substantially. You know, we can't say the same thing about food. You know, we'll talk about the different subcategories of food you cook at home, food you eat out. And we've been seeing really high pressures there, especially in the fruit, poultry, milk, and eggs category. Prices have been really flying. But that core CPI is more important that we need to focus on. And the reason for that is what Fed Chair Jerome Powell and all of the other friends at the Federal Reserve look at in order to determine monetary policy. Are they going to raise interest rates? Are they going to keep interest rates steady? Or are they even going to cut interest rates? And we've been talking about a lot of the verbiage that has been coming not only from Fed Chair Jerome Powell, but very many other Fed presidents, that they're not going to pivot under any circumstance unless there's concrete evidence that shows inflation is coming down and is on a one-way trajectory lower, not just the one-off CPI report that we had last month. So the report that we got out today at 8:30 in the morning before the market pretty much reinforces the belief that inflation is becoming well ingrained into our economy, especially as it relates to shelter. But we're gonna break down the entire report tonight. Deborah is here, good to see you. I see the one and only John Steve says, wow, the 80s called. Good to see you, Steve. Otto is here. You know, there's always traffic here on Canal Street, because if you continue to follow Canal Street all the way to the end, it'll run you right into the Manhattan Bridge. And if you go all the way to the other side, you can get the tunnels out to New Jersey and the like. Ann Chovy is here, says, hey Tom, good to see you, Ann. Dan Zhang says, hey Tom, what a bloodbath today in the market. Yeah, so the interesting thing is futures were actually fractionally higher before or pre-market when I was watching it. And then once we got this horrible inflation report out, markets absolutely got clocked. Now, I think there's an obvious reason for this, right? And we've been talking about this a lot on the streams as it relates to don't fight the Fed. Okay, so that very famous saying on Wall Street, many of the greatest investors of all time, such as Stanley Druckenmiller, Paul Tudor Jones, and Ray Dalio, oftentimes the number one thing they'll say is, you know, when determining, you know, whether you should be risk on or risk off, is what is the Fed doing, okay? And this report that we got, especially as it relates to core CPI, pretty much solidifies two things. Number one, at the next FOMC meeting, which is slated for next week, September 20th to the 21st, we're probably going to get a 75 basis point rate hike, 100%. I think that's pretty much in the cards. However, if you guys have been following me on Twitter, if you follow @WalksWallStreet, one of the things I tweeted today is that I actually think there's a possibility that we could get a 100 basis point rate hike after the abysmal inflation report that we got today, because consensus was we understand that oil has come down substantially. If we look back to March of 2022, we hit a high of about $130 a barrel. Oil has since come down, or crude has since come down to roughly $85, right? And gas prices have rolled over as well. I think the average price for a gallon of gas back in June was $5. Now it's like $3.20, $3.40. I forget the exact amount. So that particular segment is the good news. But if you talk about food, if you want to talk about shelter, which are pretty much the two main components that affect most Americans every day, that inflation is becoming very sticky and entrenched in the economy, which is not what we want to be seeing. Hey, Sunny D, good to see you, my friend. Says I agree on the 100 basis point rate hike. Yeah, I mean, I wouldn't be surprised. I definitely wouldn't be surprised if that happened. Looks like we have some police activity going on here at Walker Street. Jay says, I know it's off topic, but what do you think about the railroad strike? You know, it's actually not off topic at all. I wanted to cover that briefly because there's two really, I really wouldn't even say opposing arguments on Wall Street. But if you look at some of the portfolio managers out there, they'll say that the Federal Reserve shouldn't be raising interest rates at all because what's causing all this inflation is COVID-19, the supply chain disruptions, and shortages, okay? And if we remember back to that Stanley Druckenmiller we were analyzing 2 streams ago, one of the things that Stan Druckenmiller said is, you know, this zero COVID policy in China is really wreaking havoc on global supply chains, okay? So with this potential railroad strike here, I was reading an article in the Wall Street Journal today. This is the San Gennaro's Feast, by the way. They're setting up for it. They were setting up for it yesterday and today. You know, I was reading an article in the Wall Street Journal today that they are potentially, now again, this isn't 100%, they're potentially going to halt the shipments via rail of fertilizers and other precious chemicals, right, or hazardous materials, because if there's a strike, they don't want these hazardous materials just sitting on the road or sitting on the rail cars for nothing, which I get. However, let me try to move around here. So I think that could potentially, probably not lead to long-lasting effects of inflation, but it definitely doesn't help, right? You know, one of the components that has been really going off the rails is fertilizer. The prices of fertilizer, and with all the supply chain kinks and cogs, it's definitely not helping. So, I mean, my thoughts in relation to the potential strike is it's definitely not helping things, right? But I don't think it's going to be as bad as people think. Usually what happens is they come to the bargaining table, they negotiate with the unions, and they settle on something. You know, I'm not sure if you guys know this, but I was actually in a union back in the day, and we went through something similar. I was in Local 1101, which is the Communication Workers of America. So here we are in Chinatown. I actually went back to my favorite restaurant today, again, 456. And I'm still battling the allergies, but not too bad, Yeah, Nashuk says 30-year mortgage is at a 14-year high, 6.28%. Yeah, I saw that. And I think over time, that's going to bring down shelter costs. You know, obviously as rates go up, that's going to make home ownership more unaffordable for the vast majority of people. But I think interest rates, or when interest rates go up, especially as it relates to that 30-year fixed rate mortgage, I think it's going to take a little bit of time for that to roll through the economy. Now, I told you guys what I've been doing to get a gauge on the housing market. What I do is I create a separate email address, and in the specific markets that I'm interested in potentially buying, rental real estate in, what I'll do is I'll go on Zillow with that burner email account and highlight every single home or duplex, triplex, whatever you want to call it, in my price range. It doesn't matter if I like the home or not. Doesn't matter if it's a good property or not. Anything that's in the price range that I'm interested that I could afford, I highlight. What this will do, anytime there's a material price change, anytime one of those homes goes under contract, you will automatically get an email. And you could sort of chart this too if you want to, build something that exports that data to Excel. You could see a wave of price reductions, especially in Miami-Dade County right now, Nassau, Suffolk. But we sort of touched on that last night. But, I do think over time, this inflation will come down because the Fed is going to get extremely, extremely aggressive with raising rates. But again, like Fed Chair Jerome Powell said, it's going to get ugly for some people, okay? Equity prices are probably going to decline further, as we saw today. And monetary policy is probably going to get a lot tighter. So this is Bayard Street here. Hey, Sally is here. It's a beautiful view, Tom, really nice. Sally, I trust that you had a phenomenal Tuesday. Thank you for joining. Brevard County Real Estate says don't buy rentals unless you substantial cash in the bank untouched. This is Brevard County Real Estate. I think it's good advice. Bagels and Walks, good to see you. Dan Zhang says, have you tried that bubble tea shop yet? I haven't. I came down here today and I was eating my favorite place, but I didn't get the bubble tea, not yet. Not yet. So I think it's a lock that we are going to get a 75 basis point rate hike. But so if we think about another key metric that I like to look for in these CPI reports, it's hourly earnings adjusted for inflation, and that also rose about 0.2% month over month. However, if we look at year over year, hourly earnings adjusted for inflation, we're actually now down 2.8%. And one of the things that Fed Chair Jerome Powell talks about is, as it relates to core CPI, is potentially inflation getting ingrained into the economy, right? So when we have extreme low unemployment like we have right now, when the labor force participation rate is also at record lows. However, when we turn around and we look at non-farm payrolls, they're actually extremely healthy. That bids up salaries, and it's sort of like a downstream effect on the economy. People making more money, employers are forced to pay their employees more, and what they try to do is pass those costs on to consumers. And what we saw this earnings season is a lot of companies were actually able to do that. Okay, now I know there's a lot of doom and gloom out there, but if we actually look at the facts, earnings season was actually very, very good. Very good. The vast majority of companies in the S&P 500 actually beat analysts' expectations on both the top and the bottom line as it relates to earnings per share and revenue. However, as I was going through let's just say the earnings revisions for next quarter and the next fiscal year, there's actually many, many analysts on Wall Street now that are knocking down those earnings expectations for the S&P. And here's why I think that they're doing that. I don't think that many people on Wall Street have confidence in these employers or their ability to continue to pass prices on to consumers. Okay? Think about back to the live stream we did when we covered in-depth Home Depot's earnings. And think about what the chief financial officer of Home Depot said. He said that they are extremely surprised of the resiliency of the US consumer. They had a record quarter as it relates to revenue, a record quarter as it relates to profitability, and the average ticket price, or the average ticket at Home Depot, reached all-time record highs, not necessarily because their customers were buying more or additional products or services, but because the additional products and services that those customers buy are just getting more expensive. That's sort of the reasoning there. And so far, it seems as if the American consumer can stomach a lot of these price hikes. And I think it's for one reason and one reason alone. And I'd like to revert back to that interview that I gave you guys with Stanley Druckenmiller. If you haven't seen it, if you type !Stan, S-T-A-N in the chat, it's that American consumers have about, I think, a $2 trillion cash cushion now built up from the pandemic. So I think there's going to become an inflection point here where consumers reach their breaking point. But I think now the majority of Americans seem to have enough cash stockpiled where they can sort of stomach these price hikes. Hey, John says one thing that must be considered is with Europe forecasting recession, it will affect US companies. Yeah, so John, I think you're right. I would actually say that we're already in a recession, right? I'm just very, I guess you could say blunt about it, especially being that we had 2 negative quarters of GDP. Now, I understand there's some slight nuances there, but for me, I look at it from a total financial analyst point of view and nothing political. I think the debate whether we're in a recession or not, especially as it relates to the mainstream financial channels, it's all become political. So if you're right-leaning, you say we're in a recession. If you're left-leaning, you say we're not. I don't think a recession is a big boogeyman. So I just call it like I see it, and I tend to be apolitical about it. Tom, what do you think of the mass deplatforming? Wave, I don't want to talk about that type Tate guy. It's not really what I'm into. No donating. I fled bankruptcy. Milton says, what camera do you use? So we use an iPhone 13 mini to do our live streams. Right now we are on the corner of Bayard Street. But if we do a deep dive into the CPI report, the good news is that energy is actually down about 5%. However, on a year-over-year basis, it's up 23.8%. Gasoline on a month-over-month basis is actually down 10.6%, but up 25.6% year-over-year. New vehicles are actually up month-over-month, which kind of surprised me. And maybe it surprised a lot of you too. But it definitely surprised me. However, used cars were down about 0.1%. That also surprised me. I thought that used cars prices were actually going to be down a lot more as we talk about the potential, I don't really want to go as far to say coming crisis in the used car debt market, but yeah, I think it's very possible to see a huge wave of inventory come onto the market, especially as it relates to used vehicles. I think a lot of people sort of FOMO'd into buying a used car or even a new car and financing these during the COVID boom. And I think a lot of these could potentially go back and get repossessed. So we'll stay on that. Milton, I'm not sure what you mean. Cleanse has just seemed like today's report confirmed what all the general citizens already knew. We don't need numbers to confirm. Yeah, I think you're 100% right. I think that's a very, very good way to put it. These numbers, it's sometimes on Wall Street, and if you're an analyst, you can get so wrapped up in the numbers, But it's just like, go outside and look around, right? I'm sure many of you, as you're doing your grocery shopping or, you know, going to the store, you're probably paying more for things, right? Wouldn't you say? I could say for sure the biggest price difference for me, because I tend not to, I very, very seldom cook on my own. I'm so busy, I'm usually just out either working or something like that. But the biggest price increase for me that it's like very, very noticeable is fresh fruit and vegetables that you buy at the store. And the CPI report confirmed that. And I believe fresh fruit and vegetables had one of their highest month-over-month and year-over-year gains since the report was established. And I can attest to that. I think, you know, if we remember back to the Miami streams, I was talking to you guys about, you know, a little thing like less than 1 pound of mixed fruit was almost like $15. Things are getting pretty crazy. Things are getting pretty crazy. And that's in Miami, Florida. So, yeah, Mike says even eggs are way up. Yeah, eggs are extremely expensive too, you're right. So here we are, everybody, at the San Gennaro's festival here. Chris Beeman, thank you so much for the $5 donation, Chris. I appreciate you so much. Says, hey, it's your good friend from Arizona. Good to see you, Chris. Hopefully you had a good Tuesday. Good start to the week. Hopefully it's not too hot out in Arizona either. Dr. Longus says, hey Tom, one silver lining about the recession compared to prior recessions is that the average American has higher standard of living and greater net value. Would you agree? Oh yeah, Dr. Longus, I would agree 100%. And I think we've actually had this discussion before, and I think you may have sparked it too. You know, I think it's so important to keep that in perspective, right? You know, I always give this example of one of my good buddies that's in the military that I went to college with, and he'll tell you, you know, he's deployed to a lot of interesting places across the world, one of which being Agadez, Africa. I'm not sure if anybody's familiar with that. And he says the American standard of living, and I guess you could even just say the Western world, it's just really unmatched. I mean, some places in the world, I guess let's put it like this. Would you rather live in poverty in the United States or anywhere else in the world? Right, I think just overall the standard of living here is definitely greater than a lot of countries, and I think we should be very, very appreciative of that. But I would also extend that further and just say, you know, the Western world as well. You know, Canada, things like that. So I would agree. I would agree with that for sure. So here we are. Everybody seems to be setting up for the San Gennaro's feast. Now, if anybody remembers, I believe it was right around this time yesterday, I was talking about one of the components or one of the potential components of the CPI that was probably going to come down. Does anybody remember what it was? I said it was airfare. So I told you guys the story that I just recently purchased a flight ticket from JFK back to Miami International Airport, and I paid about $75 less than I would have, right? In 2021, I really got beat over the head with these airfares. But the good news is airfares are dropping, and that's exactly what the CPI report said as well. So the index for airfares continued to decline, falling 4.6% after a 7.8% decline in July. So that's good news. So two back-to-back prints of declining prices for airfare. And I can say with conclusivity that that is correct. I believe before all of this inflationary craziness, a one-way ticket from New York to Miami used to be right around $55 to $75 pretty consistently. But ever since this inflation crazy stuff, I was paying $230, $250, sometimes $300 for a one-way trip. And now I just paid about $106. So that is good news. Things are coming down. But that was pretty much the only bright spot and the only positive spot that came out of that CPI report today. I mean, everything else was was pretty bad, and I think the Fed is going to take a really, really massive stance here to try to crush inflation, in my view. Mike 34 says Tampa, Florida to JFK is around $110. That's not bad. That's actually a pretty good price. That's really good. Sabrina Fair's like, Tom, it's still $1,600 round trip to Tyler, Texas. Wow. You know, maybe another thing that helps though is that that's a very frequently traveled route, New York and Miami. So potentially that's one of the reasons why it's come down as well. Mike C says AK's new video shooting the new LaGuardia terminal was really impressive. You know, the only reason why I don't fly out of LaGuardia is because the public transportation to get to the city is not as good as JFK. When I do, because here's what I do. I fly into JFK, I take the air train to Jamaica Station, and then depending on the time of day, I just take it from Jamaica, the Long Island Railroad, all the way to Penn Station. It's super easy. But LaGuardia, there's no train, so you got to take the bus, and it's a little bit more cumbersome, I would say. Hey, Big Talk says, Tom, price a ticket to Ireland. Dude, I'd like to visit Ireland, man. I really, really would. Milton says, Tom, I've recently visited Dallas-Fort Worth area. As a New Yorker, the cleanliness and well-developed infrastructure of Texas surprised me. Why do you think New York City is lagging behind Dallas-Fort Worth? I think, so that was the impression that I had when, you know, I was down in Miami, Florida, Fort Lauderdale. It tends to be a lot cleaner down there. However, Austin, Texas, for me, was about the same as New York. It was a relatively dirty city, I would say. But I don't know, maybe just the politics is probably one thing. Just how densely packed New York City is potentially. But I just don't know how they do it in places like Fort Lauderdale and parts of Miami, because it's so clean that it's almost unbelievable. I really don't know how they do it, and there's no state income tax down there. So I don't know, I was a guest when I went down there myself. Hey, Zozo Bob is here, says AK took a trip from Miami to LaGuardia recently and didn't know there wasn't a rail link. Oh no, I'm sure he knew. Yeah, I'm sure he knew. I think you have to take the bus. Now, there's nothing wrong with the bus. It's just, in my opinion, it's more convenient to jump on the air train. Although it is more expensive. I think the air train now, talking about inflation, the air train I think is $8 or maybe $7.25. I gotta remember, but the air train is ridiculously expensive now. Hey, Robert says, hey, back again for a second night from Nashville, Tennessee. I travel back to the UK often. International flights have certainly dropped in price over the last 6 months. Yeah, Robert, so that's the good news, right? And I tend to be an optimist, and you know, we're discussing that CPI report here today. And there's not too much good we could talk about because food prices are skyrocketing, shelter prices are skyrocketing, but really the only thing that has came down materially for 2 months in a row has been airfares. Okay, so if we look at last month, airline fares fell about 7.8%, and this month we got a reduction of about 4.6%. You know, I forget who in the chat mentioned eggs, but if we look at the meats, poultry, fish, eggs index, as well as the fruit and vegetable index, as well as the non-alcoholic beverages index, they all increased 0.5% or 0.5% in August. And I could definitely say that that is correct. That data is correct. I always like to tell you guys the story. Before we start the live streams in Miami, I go into the Whole Foods, I get a cup of fruit, and it's almost $15 or sometimes a little bit more for about a half a pound of fruit. It's just ridiculous. $15. So, I don't know. I usually don't buy too many eggs, but it seems like everybody in the chat has been putting that eggs have been on an astronomical rise as well. Hey, Ramses Morales, good to see you. CR says, I just flew from Heathrow to Miami. Awesome, I hope you enjoy Miami, man. Gabe says, yep, the air train is $8 now. Can you believe that, man? That is insane. $8 for a ride on the air train. So now that we're talking about the inflation, here's one of the things that I am very, very against that New York City is potentially proposing. Now, I don't want to get ahead of myself to say that New York is going to do it, but they are proposing they do this. And it is to put a toll road, hold on one second. It is to put a toll road between, I think, 34th Street and 59th Street. So like an additional toll or a tax, a congestion tax, to encourage people not to drive into the city, but to take mass transit. I mean, how much more can New Yorkers take? I mean, you nickel and dime these people every turn they take. It's really, really terrible. I'm definitely against that. And just from personal experience, obviously now that a lot of the corporations are bringing employees back to the office, a lot of my old management that I've known for years, and many of them being female, they tell me that if they have to go into the office about 2 days a week, they would rather drive into Manhattan because they are a little bit on the fence about taking public transportation nowadays due to the increase in crime, which is understandable. So I think this potential, I like to call it tax, is potentially discriminatory to, working class people. If you want to do something like that, then I would say, well, fix the crime problem in the subways first before you essentially force everybody to take public transit. That's sort of what my 2 cents is on that. Here, I'll give you guys one more shot of the San Gennaro's feast here. Denise says, today beef, poultry, and etc. are just not cross, probably. Mike C says, once they get their foot in the door, there will be congestion pricing all over the place. Yeah, I think that's just ridiculous. I mean, there comes a point where you can't just keep nickel and diming everybody for everything. It's just getting too crazy. Yeah, Deborah's like, the stupid congestion prices, not a good idea. Yeah, Autumn Beauty is like, it discriminates. It definitely discriminates against people in the outer boroughs. That's true. Hey, Cynthia Beal. This is Tom, my friend, also says the subway crime is keeping people away, part of the reason. He also thinks that they should offer massages to workers that come back to work. Mustafa says, you make me want to move back, but I gave up my apartment. Sure, I'll never get that price. Ooh, yeah, because the rents are going crazy. That's another thing in the CPI that continues to go up, is the shelter prices. Brevard County Real Estate says, you want to live there, pay. I believe in the market. I disagree, but I respect the opinion. The ABX girl says, I agree about subway crime and cleanup issues. NMB 045 says, that's how I feel in Montreal too, Tom. Taxes and fees everywhere you go. And I think I've said this stance, so NMB 045, I'm actually not opposed to the ridiculously high taxes, right? I'm actually not. I've been in tech sales here for my entire career and have paid ridiculous amounts to the city. But it comes down to the very famous saying, no taxation without representation. So if the streets are clean, if the city is safe, if my mother doesn't have to say, hey, do you think it's safe for me and your grandmother to come into the city this weekend? I've been seeing a lot of things on the news. We shouldn't have to deal with that if we pay top tick tax bracket. If it's clean and everything's a utopia, sure, go ahead. I'll pay it. No big deal. But again, not to sort of knock New York. I love it here. I think all major cities go through their ups and downs. And I think the pandemic has exacerbated the, wealth divide in the country. And I also think that's why we're seeing a little bit of an uptick in violent crime on the subways and things like that. But I'm confident at the end of the day that the mayor and the NYPD will get it under control. That I'm confident about. Yeah, Manny Explorer says the tax money is also going into the wrong pockets. Good to see you, Manny. Welcome. Hopefully you had a good day. CR says in Britain the prices of rent are starting on the decline. Well, that's good news. Here's what I think, and I've sort of said this before, and I think this relates very well to today's higher than expected CPI report. Usually it takes a little bit of time, maybe about a couple quarters, for interest rate hikes to really start to hit the housing market, right? Because from my experience, this is what I usually see. As interest rates go up, you'll start to see home sales taper off, but prices will still remain relatively elevated. Then, as these homes sit on the market for longer and longer periods of time, what you'll have are very, very slowly and incremental price declines and price decreases. And then from there, you'll start to see some rents coming down. And that could take 6 months to 8 months. And I think that's exactly what we're seeing. I told a story about how my friend was renting a 2-bedroom on the Lower East Side. His landlord was gonna raise his rent $1,500. And he's like, no way, I'm not gonna renew. And if you look at that trend, more and more people that I talk to, and you could even look at the data as well, many people are moving out now just because landlords are hiking rent. So there's so many people that are not renewing their rentals, and that's not a guarantee that these landlords could fill each and every unit. Now, they may fill some of them, right? But there's no guarantee that as the market cools down, as interest rates go up, as the economy slows, that these landlords can command these top tick rates. So I think probably Q1 of 2023, that's when we're gonna see rents either start to stabilize and come down. So I believe if you're in the market or looking to purchase a home or a rental property, I think you're gonna have a lot of bargaining power in Q1 of 2023, like a lot. We were covering some of the single family home builder earnings reports, and one of the most notable things that have been coming out of a lot of these home builders is that in order to close deals, number one, in order to close new deals, and number two, in order to save the deals that they've already closed from canceling their contracts, they've been having to offer some sort of a contingency, whether that is a price reduction, whether that is adding new, amenities or appliances to kitchens or whatever it is. You're starting to see those negotiations move towards the side in favor of the buyer as opposed to the seller. If we had this same conversation in 2020 or at the Q4 of 2020, Q1 of 2021, we would never think in a million years that these home builders would offer price reductions. If anything, we were talking about the crazy environment where people were offering $100,000 over ask and waiving all of the homeowners inspections. A lot of that stuff is going away. So I think the good news is if you maybe are a first-time home buyer, or maybe you're looking to buy your first rental property, I think you're probably gonna get some good deals here in Q1 of 2023, because by that time, the Fed funds rate should be right around 4.25, especially if we get that 75 basis point rate hike next week, which I think we will. And I also think there is a slight chance that we may be able to get a 100 basis point rate hike on Tuesday, especially after this egregious CPI report. Brevard County Real Estate says, Tom, home building is about volume, then margin. Steph writes, as you say amenities in a funky way, we say it completely different. Funny. Shadow Stock says, New York City housing is not market-based. Government regulations give the connected access to New York City housing. So Shadow Stock. Okay, so you think there could be some bureaucracy going on here? I don't deny that. Be careful. Dan Zhang, hey. Dan Zhang says, I got 2 months free rent when I signed mine in Long Island City last year. Dude, yeah, that's fantastic. I remember those COVID deals. I got a nice COVID deal too, like a really, really nice one. And when I moved out of my place, they turned around and rented my same studio for close to $4,500. I mean, I don't know who would pay that. My apartment, even though it was nice, it was literally like a box. I mean, it had a kitchen, it had, you know, its own private bathroom and all that, but I mean, I would never in a million years pay $4,500 for that. Jonathan Francis, Tom, the cost to own property in the city is almost not profitable due to all the added costs. Well, I think probably on a smaller scale, I would agree. And we were talking about this, I think, a little bit last night. You know, with all the taxes, with the property taxes, I think it's making it very, very difficult for mom and pop landlords to survive. However, if you're a very, very large real estate developer, you know, you could probably negotiate deals where you get tax incentives and different credits and things like that. You know, we were talking about that particular building on Billionaires Row, 432 Park Avenue. And a lot of the times when they develop these extremely, extremely expensive and fancy and luxury apartment buildings, they usually get some sort of tax credit or tax subsidy from the city. So what they'll probably do is they'll build, you know, a couple affordable housing units in the Bronx, and then they'll get a huge tax break on their mega luxury apartment tower. Melissa White says, Tom, curious why you picked Florida. For a couple reasons. The first reason is it's very, very close to my family, and all of my family is in New York City and Long Island. So at a moment's notice, I can, you know, pay $100, go to the airport, and be in New York City in 2.5 hours, 2.5 to 3 hours. So it's very, very close. Also, the weather is fantastic, and I love the summer. You know, not everybody likes the summer. Some people hate the very sticky and hot humidity. I actually tend to like it. And the last reason I would say is I think a lot of technology startups and VC is starting to open up satellite offices in Miami. So down the road, potentially if I launch a software company or something like that, I think I need to expand my network from only New York City to Miami as well. So I think it was a network play, it was cost of living play, and I just enjoy it. I really like it. But everybody, this is Gasoline Alley Coffee, one of my favorite coffee shops in the entire New York City. If you're ever in the city, you gotta visit this place. It is fantastic. Hey, Bozo is here. Good to see you. Welcome, welcome. So we'll walk past Bleecker Street.
At some point you
Hey, Dan Zhang says, Tom, you just hit 20K. That is insane. Well, I really appreciate everybody joining the live streams. I never thought in a million years that we'd have this many people. So I thank you everybody for joining the channel, subscribing to the channel. Hopefully you're enjoying the content. I find it, I always look forward to these streams, walking around the city, talking about the financial markets. And we got a great group here, so it's been a blast. It's been fantastic. So I thank you guys very, very much. Very cool. Ooh, Steph writes, I wouldn't recommend Cuba for a vacation. So everybody I've talked to that's been to Cuba says they really love it. Now, unfortunately, the political climate over there is horrible. And I actually was reading an article in the Miami Herald that as of right now, there's actually more Cuban immigrants than ever before in the last 20 years starting to come to Miami. And that is due to the really egregious political climate over there. So, hey, we're happy to have them. If you want to flee socialism and take part in the golden goose of capitalism, the more the merrier. So I'm all about it. Hey, Gregory is here. What's up, Greg? Good to see you. So one of the things that I did notice today as it relates to the market action, the market volatility, if you guys pull up tradingview.com, check out that action in the VIX today. So the VIX is the CBOE volatility index. The VIX was up at one point, I think 7 points, or about 14% to about 27. Now, even though that is technically considered historically elevated, it's not really where we need to be yet in order to call a market bottom. But once we got that CPI inflation report out, which was horrible, by the way, the Fed is going to have to go scorched earth and kill this economy to ward off inflation. But the VIX went to the moon, okay? So I think it's important, if you have TradingView, or if you want to put it up on your desk or something while you're working, keep an eye on the VIX. Also, look at that CNN fear greed indicator today. We're at about 40, which is not extreme fear, but it's on the borderline of fear and extreme fear. The only piece of good news is that put to call ratio caught a little bit of a bid. So we're seeing the market stack the put side of the market more so than the call side of the market. So people are getting pessimistic here. That 10-year US Treasury yield took off at about 3.412%. Okay, and the 10-year US Treasury yield is pretty much used as a proxy to look at 30-year fixed rate mortgage. So as that US 10-year Treasury yield goes up, so does that 30-year fixed rate mortgage. And I think we're at about 6% now. So the good news is that I still believe that prices are going to moderate and come down here, but it may take a while for the effects of those rate hikes to start hitting the economy. I think that'll solve the shelter side of the inflationary problem. However, where I am concerned is the food side of the equation. I think that may persist, and many of you were actually typing in the chat and commenting on the potential railroad strike. And if you read the Wall Street Journal today, what a lot of these companies are doing in preparation for that potential strike, or the alleged strike, is halting or thinking about halting shipments of fertilizers, shipments of chlorine for water purification and things like that. And I don't think that's going to make a lasting impact on inflation, but it's definitely not going to help. It's definitely not going to help. So we have to keep our eye on that. But I just thought those three key pieces of action in the market today. Obviously, what do we always say on the stream? If you want to know where the stock market is going to go, you got to look at the debt market, because in and of itself, the stock market derives its value from the debt market. And we got absolutely clocked today. The Dow was down about 1,200 points, because I think this market now realizes that the Fed is going to have to go big in order to regain any of the credibility it may have left. So this is now East 4th Street. It is quite windy out now. Hey, Valerie's just found this channel and I love it. Thank you, Valerie. I appreciate you very, very much. Blues Writers, Tom just picked up History of the Future, 556 pages. There goes my September, October, and November. Hey, Blues Writer, you're not going to be disappointed, I guarantee it. If you are disappointed, I mean, that's just not possible. You're not going to be disappointed. So, quick book recommendation for everybody. I know the story already, but I'm rereading the story. It's a fantastic book. It is called History of the Future. And essentially it is about the Oculus deal, the acquisition of Oculus by Facebook. And it's such an incredible story, and I think it's actually probably quite appropriate to read it during these times, especially as, you know, more people are getting laid off and, you know, the market's getting clocked. This is a true story of American exceptionalism, and it really reinforces the belief that if you are ruthlessly persistent in pursuing what you want to do, building the company you want to build, you will have your breakthrough. But it may take 20 years, it may take 40 years, it may take 50 years. But if you're persistent, if you wake up every day and you freaking hammer on that project, in America, you have the equal opportunity to create something amazing. So it's just an unbelievable story, that story of Oculus. But I'm not going to go too far into it. I don't want to ruin it for everybody. But it's a wild, wild story. The LT Prods' History of the Future is an awesome title. It's a long book, and usually I don't like reading long books because my attention span is very short, but this is a phenomenal read. And it'll also detail what it's like to go through a big M&A activity or an M&A transaction. So for many of you, I don't know what this guy's doing. So for many of you who want to become an investment banker or work in M&A, I think this is going to give you a very good example of what the process is like too. So from that aspect, it is a great read. But now we are at Green Street. Hey, Google is here. Says highly recommend it as well. Ah, so Google, you've read the book. What'd you think about it? I loved it. It's just crazy to think that, I don't really want to give the book away, but I'll give a little bit of it away. He literally built the Oculus out of his trailer in California. Not even a house, not even a garage. He had a trailer. And this thing was the most dumpy trailer ever. But the thing that was really admirable about, you know, Palmer Luckey is that you could tell he never really had an ego. His ego was his passion to pursue what he wanted, to build new technology, new products and services for everybody to enjoy. And now he's actually helping the US government and, you know, fighting foreign threats, which is fantastic, but I won't give too much of it away. But he was extremely persistent in building, and talk about never quitting. That is the, yeah. Anyway, check it out. Hey, Cindy Foley says, good night all. Can't hang out too much tonight. Congrats, Tom. Thank you so much, Cindy. Hopefully you had a fantastic start to the week so far. Dan Zhang says, sorry, what is the name of the book again? It is called History of the Future. History of the Future. It's pretty long, but I would recommend it. Pretty long, but I would recommend it. Hey, Armored Knight is here. Good to see you, Armored Knight. Welcome, welcome. So now we are outside the very famous Washington Square Park. Dan Zhang says, wow, only $15. Dan, if you go on Amazon Books, you can actually probably get it used for like $3. Hey, EBITDA says, hey Tom, how about the market reaction today? Ridiculous. Gonna be hard to want to invest when, yeah, and paying 4%. So here's an interesting thing, EBITDA. Obviously the market got clocked because what do we always talk about? Don't fight the Fed, right? And core inflation came in well hotter than expected. So if we revert back to what Fed Chair Jerome Powell said at Jackson Hole, he's like, we will not pivot, or we will not either start to hold rates steady or cut rates, even if we have one or two CPI reports that come in better than expected. Well, now we got one that was worse than expected. So the market is probably piecing all of this together and saying, look, what we have right now is an environment where inflation continues to ramp, and it has become ingrained, I'll go this way. And it has become ingrained into our economy. That's number one. Number two, we're probably gonna be in an environment of elevated interest rates for the foreseeable future. And number three, actually, if you've noticed the trajectory in forward earnings or earnings estimates for the next fiscal year, analysts across the board have cut forward-looking estimates for earnings in the S&P 500 by about 5.5%. Now, the reason why I think they did that is because, yes, this earnings season was actually really good. We've talked about that. This earnings season was actually very, very good. However, where is the breaking point for the American consumer to say, look, I can't continue to eat all these costs? Because what's been happening right now is, as companies have to pay their employees more, as they have to pay more for raw materials to build those products and services, they pass those costs on to us. And as of right now, and Stan Druckenmiller said this about 3 months ago in the interview, he said American consumers have about a $2 trillion piggy bank right now from savings from the pandemic. And that may take a little bit to work off. So there's gonna come an inflection point here. And that inflection point could potentially come in Q1 or Q2 of 2023, where you're gonna start to see maybe same store sales at these particular companies fall off a cliff because consumers are just gonna say we've had enough. As of now, and as of Q2 earnings that just rolled around, the consensus was that, yeah, consumers were able to absorb those price increases. But many analysts think that as inflation persists, they have no confidence in consumers like me and you and everybody in the chat to be able to continue to pay these elevated prices. Now, they may be right or they may be wrong. I don't think that's the point. I think the overarching theme here is don't fight the Fed. If you're trying to add risk during a tightening cycle, very, very seldom does that work out. So next week, it's almost a lock. We're gonna have a 75 basis point rate hike, almost a lock. I wouldn't be surprised if they go big and throw a big cannonball at us and give us 100 basis points. That wouldn't surprise me at all. However, there are some deals to be had now, but that is sort of where I kind of get a little bit of cold feet, I would say, because a lot of people are trying to bottom fish this market and buy a lot of these companies that are down 70 or 80%. And if we look at the statistics, and we've gone over this many times, former true market leaders, so in previous bull markets, After a true market leader tops and declines more than 50%, there's only a 2.5% chance that those particular stocks will ever reach all-time highs again, ever. So as of now, there's only about 20 stocks that have extreme relative strength and that are trading near all-time record highs and that have all the things that we look for, such as earnings growth, such as revenue growth, positive return on equity, pre-tax and after-tax margins. So I don't know, I think we can make a new leg lower. I think it's very possible as liquidity dries up here. Let me know if you guys hear the wind noise in the microphone. Because it is extremely, extremely windy here. Jay says, I went to cash for now, not buying anything. Well, I'll give you guys another sort of market statistic here. Usually when markets tend to bottom, you have these crazy volatile swings, and those are usually shakeouts. Now, I'm not saying the market is bottoming, but I mean, for across the board to have every single stock in the NASDAQ 100 in the red, the last time that happened was March of 2020 and in 2008, so it's only happened twice. And today was one of those days where every single stock in the NASDAQ 100 was in the red. Hey, Ryan Royal is here. What's up, Ryan? This is only a little wind noise, but we hear you clearly. Copy that, Ryan. Hopefully you had a fantastic day today. We are now on East 10th Street. Yeah, Shadow Shocks is the SQs, or the inverse QQQ, was up 16.5% today. Hey, Nestor, is the stock market, will the PPI for tomorrow, can it affect it like today? Yeah, it definitely can. Absolutely. Hey, Carson is here. It says, evening, Tom. It's been a while. School started, so I've been busy with that crazy day in the market. Carson, thank you for joining. Yeah, I forgot. So everybody's back to school now. All the colleges and universities are back. So good luck with the semester. I have noticed that ever since the classes started, that there's been a lot more people in New York. I think you guys can tell that too by the streams. We've had lots more people on the streets. Big Pick says the inflation is global. Well, Big Pick, one thing that's interesting is look at the countries across the globe where inflation is actually under 3%. I think China is under 3%. I think Thailand and South Korea. I think South Korea may be at like 4.5%. But the countries that are taking the brunt of the inflationary pressure is America, or the United States, many countries in Latin America, obviously, and a lot of the European Union as well. But if you look at Japan, if you look at China, even Korea, I believe all of their inflation rates are well below 5%. Wow, check this out. So we have a beautiful view of the Empire State Building tonight. And if you guys are enjoying tonight's live stream, feel free to leave a like on the video and subscribe to the channel if you are new. We usually go live about 5 days a week between New York City and Miami, and we'd love to have you along for the ride. Speaking of books, this is a pretty good bookstore here on East 12th Street and Broadway. Disney Matt says, Tom, did you hear of the newish plan to extend Manhattan with landfill? That would enclose Governor's Island. What are your thoughts? You know, I think I did hear about that. I didn't know it would extend all the way to Governor's Island. I'm not too sure I'm too hot on that plan, because isn't San Francisco right now having a really big problem with their buildings sinking? Because that's exactly what they did. They filled the bay with dirt, essentially, and a lot of those buildings are built upon like where it was supposed to be water. Am I getting that correct? So I don't know. I probably won't. It'll never materialize, but I don't know. The stuff that's happening in San Francisco is crazy. Has anybody seen like I think it's, what do they call it? The Millennium Tower, or the Salesforce Tower? Aren't they quite literally sinking into the ground? Am I right on that? Yes, so John says, yes, the Millennium Tower. So John, I think the reason for that because it's literally built on sort of landfill, I guess. They filled in part of the bay and they built on top of it, and now it's literally sinking into the earth. Oh, Eric says they fixed it already? Well, I mean, if it's safe, if they fixed it, then I guess it's all right, but I mean, what is the cost to fix something like that? Probably not cheap. You know, I was watching a documentary on it, and I believe what they do is they drill a massive hole right near the tower, and they pump, or they either push water in it or they pump water out, and the vacuum sort of levels the building, I think. I'm not much of an engineer, but I watched a documentary on it. Eric says it's a huge cost. Ramsey Morales says, hey Tom, can you show us the Chrysler building? Not sure how far you are from it. Yeah, so we'll go there today, actually. We will go up to the Chrysler building today. Oh, I almost forgot. If you guys want a live look at that CPI report, I actually put it in the Nightbot. So if you type !CPI in the chat, the Nightbot will drop the CPI report from the Bureau of Labor Statistics website. And an interesting thing and an important thing to do as you're analyzing that CPI report is look at the individual categories. And you could even make your own Excel spreadsheet for this. But try to develop emerging patterns, right? Try to spot and see if you can start to see emerging trends happening. And one of the easiest ways to do that is, obviously everybody likes to look at the year-over-year numbers, because those are gonna, generate the most clicks. So if you notice, like the CNBC articles today, the Bloomberg articles, was all about, wow, look at that year-over-year increase. But if you want to start to identify an emerging trend, it's more important to pay attention to the month-over-month numbers. So if you type !CPI in the chat, the Nightbot will drop the link to that CPI report, and you could look at the not only year-over-year increases, but the month-over-month increases. Roy S. has always loved Union Square. Good to see you, Roy. Hope you're doing well today. Sunshine After Rain. Good to see you. Sunshine After Rain is a good moderator. Hope you're well. So we'll walk up 5th Avenue, actually. Usually we walk up Broadway, but I think today is more appropriate since we'll go up to the Chrysler building. aka Brad's brains. So many young people just walking around with the mask. Why are they all so compliant? It's irritating. Be young, you should rebel. Yeah, I mean, usually you don't really see too many people with masks anymore, but my whole point is, if you want to wear it, whatever, man. Just as long as you leave me alone. I tend to be a very quiet, private person, so as long as you're not hammering me, you can do whatever you want. You could wear a mask while you're in the shower if you want. But the moment you start to hammer me about it, that's when we're gonna have a problem. But you could do whatever you want. You have the freedom to do what you want. You could wear 3 masks in the shower if you want, but let me do my thing. Yeah, Sally says I still wear my face covering. Yeah, if you want, I'm totally for it. If you want to wear it, especially people that are higher risk, older, wear it. I think everybody should be free to do what they want. Doesn't bother me. You know, I do have this one in particular client. He's been my friend for a long time, about 7 years now I've known him. He'll request that when we meet in person, I put the mask on, and I put it on, I don't care. He's an older gentleman. He's an at-risk individual. What do I care? I'll throw the thing on. I don't care. All right, I'll give you guys a sweeping view of the beautiful Union Square Park here. Hey, Cheryl is here. Says, Tom, me and my son just tested positive. Oh my God. Well, Cheryl, I'm wishing you a speedy recovery. Hopefully it'll just be, hopefully it's one of those asymptomatic cases where you're not gonna have any symptoms and be suffering. So hopefully you get over it very, very quickly. So this is East 17th Street and Park Avenue South. We'll quickly just run through the contents of that CPI report. Obviously, the headline report came in at 8.3% year over year. Many economists on Wall Street were expecting only an 8.1% reading. So we beat expectations, which is not the good case of beating expectations. It's actually bad. On the core CPI side, we came in at about 6.3%. Obviously, core CPI excludes very volatile food and energy. Consensus on Wall Street was for a 6.1% reading, so we also came in hotter than expected there. If we think about the readings on a month-over-month perspective, you'll see that headline CPI went up about 0.1%, while core CPI went up about 0.6%. So this is not good. And obviously, I'll just like to reiterate one more time that the Federal Reserve doesn't really look at headline CPI. They put most of their weighting and their credence on core CPI. So if there was going to be one of those two numbers that was going to go down, you would actually want core CPI, especially, if you have large exposure to equities, if your goal is to have the Federal Reserve loosen monetary policy. But now that we're seeing inflation extremely ingrained into the system, I think that a lot of Americans have lost trust in the Fed. Because think about what the verbiage and what was communicated to us this time last year. And if you were watching the streams, you already knew this was all nonsense. The Federal Reserve was coming out and saying that inflation was transitory, it was only temporary, it's going to be a blip in the system. But we know, I think the majority of Americans wouldn't fall for that type of propaganda. I mean, if you print trillions of dollars and you shut down the global economy and supply chains are all backed up, I can pretty much guarantee you that you're going to have some sort of an inflationary event there. So, which leads us to our next discussion of, do we think the Fed is going to enter the Paul Volcker style of monetary policy management? So if we think back of March of 1980, Inflation in the United States was 14.8%. In order for Paul Volcker to destroy inflation and bring it back down to 3.5%, he needed to raise the Fed funds rate to about 20%. And in doing so, that created about 10% or 10.5% unemployment. For some context, right now, our Fed funds rate is right at about 2.5% right now. I don't think it's ever possible to go back to 20% Fed funds. I think that would literally blow up the system because we have a monumental amount of debt. We live in a debt-based society. Essentially, ever since 2008, the only way the system has been going is just debt acquisition in perpetuity. So I think if we were to ever get really aggressive in raising those rates, especially to 20%, it would just be Armageddon. You would have people starving in mass. However, I do think the Fed funds rate can get to 4.5, 5. I think that that's possible. If that happens, you'll probably see unemployment at around 8%. And you'll see a lot of these zombie companies that we've been talking about, especially in the Russell 2000, a lot of those will probably go belly up. Because if we think about the environment we were in, a lot of these very high beta SaaS companies, very high growth, especially a lot of them that have been getting advice from private equity or venture capital to only focus on top line, right? You don't need to focus on profits or generating profitability. Only focus on, TAM expansion and going after that total addressable market. But that only works in an environment where money is pretty much free. Because you can just borrow money in perpetuity at low rates to pay your employees, to fund R&D. But once those rates go up, how are you going to now service your existing debts if you don't have the profitability or the sufficient revenue to come in to service those existing debts? You can't take on new debt because that debt is now more expensive. So it's going to be interesting to see how all this plays out. But I would definitely wager my money that we are going to be entering in a new paradigm of higher rates, and the market is going to need to adjust for that. Hey, Elliott Wave Reviews, Tom, why wouldn't focus strictly on Florida for your real estate investments since you experienced such good results from your first property? I don't know. I think that for me, ultimately, I want to have properties in multiple markets. I don't think I would want to have an over concentration of real estate in any one particular market, because let's say if I had all my real estate, in some outskirt place of Pittsburgh, Pennsylvania, 100 years ago. Well, I would probably be doing really well, but once the steel industry went away, what's the value of that real estate now? Probably nothing. So I guess to hedge for industry trends, now obviously I think there's going to be a continuous job growth in the tech sector in Miami, but I also think there's going to be continuous job and finance growth and tech job growth in New York as well. So I think I want to have about 3 or 4 bets and have a concentration of properties in those 3 or 4 markets. I don't know, that's sort of my thought process. Hey, FredX is here, good to see you. Hey, Arnold is here. Says, hey Tom, how you doing, brother? I am doing very good. It's a beautiful night out here in New York City. We are crossing 23rd Street and Park Avenue. And we are actually going to head uptown towards the Chrysler Building and Grand Central Station. So if you actually look all the way in the distance, you can see Grand Central. Hey, Eric is here, says love the walk. Good to see you, Eric. Welcome. Hope you guys are having a good Tuesday. But I want to ask the chat, obviously we've been discussing the CPI report, but what particular items, if you could name maybe one or two things, let's just stick with the top two. And maybe you would say, oh, nothing in my life is going up, and that's fine. But what would you say is probably the two main categories that you have noticed in your life that you're like, wow, this costs a lot more than it did last year? Now, if it's nothing, then you could put that in the chat, but I'm just curious here because I think it's, now that we have, 850 people in the chat, that's a pretty decent data set to pull from, actually. So if you had to pick the top two things that you're paying a lot more this year as relation to last year, what would it be? Big Pick says avocados are sky high. Wow, Melissa says groceries are 2x. Jared Covey, what's up, dude? Says food. So Jared's like food. Lil L says eggs and imported stuff like my British and Korean fried rice are through the roof. Homeowners insurance is Roy S. No, Abby one says homeowners insurance. My homeowners insurance actually went down, surprisingly. Golden says electricity, gas, and oil. Gas, food. Vincent says hello from Melbourne, Australia. Good to see you. Armor Knight says gas, food. Hey, Stitching with Sue says utilities are up. FredEx says airline tickets, gas, and food. Cell phone bill. Wow, NMB 045, really, cell phone bill. That's an interesting one. Somebody says luxury items, food. So an overwhelming response, everybody, has been food. An overwhelming response has been food. And that exactly correlates almost 100% with what we're seeing in the CPI. Food is not only up on a year-over-year basis, it's up on a month-over-month basis too. So again, if you want to look at that data yourself, if you type !CPI in the chat, I actually programmed the Nightbot to give you guys the CPI report, and you could look category by category, line item by line item, at what particular categories in the economy are appreciating the fastest, and food is definitely top tick. Okay, I'm seeing a lot of natural gas. PB on the go says rent and utilities are also up. So I think there's only been about 3 or 4 people who's mentioned rent, which has really surprised me because rent, especially here in New York City, has doubled. Really, really crazy. Big Talk says, Tom, do you own a car? I do not own a car. James V says cars and trucks are more expensive. So that was the particular part of the CPI report that actually surprised me quite a bit. Obviously, we've been talking about how I believe used car prices are going to fall off a cliff, but they actually weren't down much, not too much, and new car prices were actually up month over month and year over year. Now, it's interesting, not to get too political, but this Inflation Reduction Act that's meant to reduce inflation. As we were talking about some of the tax credits and tax subsidies in a lot of these EVs, it seems as if a lot of these auto manufacturers price adjusted their cars to match the amount of the EV subsidy. So I'm gonna write a little bit more about that in the Behind the Street newsletter, but really, really interesting predicament there. All right, so now this is Park Avenue. And I think this is 24th, 25th Street. I think. But if you guys want to sign up for my
free investing newsletter where we cover a little bit more in depth of what we talk about on these streams. If you scan the QR code on your screen, it'll drop a link to the Behind the Street newsletter. If you punch in your email, usually every other Tuesday after the market closes, it'll send you that free newsletter where we cover not only the US equities market, but emerging market, fixed income, housing, all that good stuff. Hey, Road Dog 41, what's up? So I'm seeing a lot of people saying avocados have been going up. I actually have an avocado tree in my backyard. Mike says lithium prices have gone up, not like the car companies predicted that EV batteries would drop with volume production. So Mike, have you heard of the investor Ross Gerber? So I don't necessarily agree with everything Ross says. However, I do always pay attention to when he speaks. I actually think he's a pretty good guy. So if you follow Ross Gerber on Twitter, I think I actually just recently retweeted one of his interviews that he gave in relation to a lot of these EV manufacturers or EV car companies. So if you follow at Walks Wall Street, I think it's one of the first or second things on my page is this interview with Ross Gerber. I believe on Bloomberg, or it was either Yahoo Finance. I forget which news outlet it was. But obviously he, along with Ron Barron, and Ron Barron has really been I would say the voice of reason when it comes to investing into EVs or electric vehicles. And he is a self-made billionaire, Ron Barron. He was one of the first original investors to really bet on Tesla and make a fortune. But I think Ross Gerber was probably number 2 in line to that. And I want you guys to take a look at that interview that Ross gave with one of those main news publications, because what you'll find is that he seems to be increasingly bullish on the full suite of EV auto manufacturers, which to me is interesting because a lot of them are big money pits. And obviously, as of right now, Tesla is the true market leader in that EV space. A lot of the other ones either are huge money pits, they don't have the profit margins that Tesla has. And if you remember back probably about 2 or 3 weeks ago when we did a deep dive into Tesla, one of the things that I said is, look, yes, Tesla trades at a premium valuation, but here's what a lot of the Tesla bulls say as to why it deserves that premium valuation, is because they've actually been able to maintain relatively high margins in comparison to the industry standard. So if you think about like a GM, a Ford, a Volkswagen, something like that, the gross margins on those products or those vehicles are going to be mid-single digits, maybe like an 8% gross margin. Tesla's almost 30%. Now, granted, last quarter they did have some slight margin compression, but who didn't? Who didn't have slight margin compression last quarter? You know, with inflation, with the global semiconductor shortage. And I think Tesla actually navigated that global semiconductor shortage better than anybody could. So check out that interview. I think you guys will find it interesting. I'm just a little bit on the fence. I don't know if I buy it. Yeah, I don't know. Hey, Austin City Limits is joining us. Good to see you. Welcome, Austin. Trust you're doing well today. I see Roy S. Sonny D says, Tom, bottled water seems to be way up also. Size of products smaller and their cost is more. So Sonny D is talking about shrinkflation. So shrinkflation is very, very real. It seems like every time I go to the grocery store and buy something, the contents of the packages is like nothing. It's like 90% air and 10% actual product. So that's very true. So I do want to mention one other thing. Now that we're on the conversation of water, there's a really, really interesting startup that I actually think is based out of Austin, Texas. And the startup is, I think it's called Free Water. So this startup, what they do is they just pass out water for free. And the way they're able to do that is because, let's say you go to the store, right? And you buy a bottle of water. The packaging is just all bland. It doesn't really say anything. It may say Poland Spring, and that's about it. But with this free water, what they do is they take the packaging and then sell advertising on the packaging. So they'll call around to businesses, and you'll have like an Amazon ad on your bottle of water, and it makes the water free because the advertising pays for everything. It's the most ingenious thing I've ever heard in my life. Now, I forget what the name of the company is. I think it's just called Free Water. So it's completely 100% free. They're gonna roll out vending machines. So in theory, when you go to one of these vending machines, all you do is you have your app, and you can get a bottle of water for free. And I know what many of you are thinking. Well, couldn't somebody just get 10,000 bottles of water? The answer is no. Because you have to scan the app at the vending machine, and I think you're limited to 2 per day. But I think it's a pretty interesting proposition. So the company is profitable, and they're able to give out water for free because they run advertising on the packages. Hey, Autumn Beauty is here. Good to see you. Yeah, Golden's Dawn says shrinkflation, so true and also very annoying. All right, so we are almost to Grand Central Station. Maybe tonight we'll actually go inside Grand Central. We haven't been in there in a while. We're under more scaffolding today. Autumn Beauty is here. Says, hey Tom, good to see you. Big Pick says, how about free coffee? I think that may be a little bit harder to do. It's actually not a bad idea. Cynthia Beal says, I found the Free Water Company. C from Tennessee says, Tom, how many steps do you get in a day? I think we're right at about 25,000 to 30,000 a day. It varies. Usually on the weekends, we'll probably nudge up against like 27,000, 30. But I think on the regular weekdays, we're right around 20 to 25. Wow, I'm gonna show you guys a beautiful view here of the Empire State Building. Check this out. Very seldom do we get a chance to see the Empire from this view. So this is on Park Avenue in East 53rd Street. Looks amazing. I think this is a 10 out of 10 here. Dan Zhang says, Tom, do you wear an Apple Watch or Fitbit to track your steps or calories? So I don't wear either. I think just my phone tracks it for me. So if you just go to the health app on your iPhone, you'll be able to see it. And it usually says right around there, right around there. Hey, Tariq Khan says, hey Tom, these inflation reports keep dropping my portfolio. Between them, Jay Powell, we ain't going up anytime soon. So let's talk about valuation here for a minute. So number one, I think you're right, but think about where the S&P 500 is trading on a forward times for the next 12 months earnings. It's trading at about 17 times 12-month forward earnings. So that's actually historically quite low. That's actually lower than the average. However, here's the big key. Here's the key. We'll wait till the garbage truck passes. The key is right now, many analysts on Wall Street are actually revising down their earnings for next year. And the reason why many analysts are doing this is because they do not have confidence in consumers to be able to absorb the price hikes of a lot of these companies. So earlier on in the stream, we were talking about how Q2 earnings, or Q2 S&P earnings, were actually very good. So here's the Chrysler Building for all of those who are asking about it. Looks beautiful tonight. So Q2 earnings were actually very good. Were very, very strong. However, Tariq, you just mentioned something, and we were talking about it today. Inflation, especially that core CPI, continues to ramp. So that means prices are going to continue to go up. And as of now, I believe American consumers have about a $2 trillion cash cushion. About a $2 trillion cash cushion. That's probably going to be eroded over the next 6 to 12 months, in which case, the theory is they will be no longer able to afford those high prices, because right now, corporate earnings remain stable and are growing because companies are passing on all of those extra labor costs, extra raw material costs. They're passing those through to us, and they're maintaining their margins. However, there's going to come a time where either unemployment rate goes up to about 5%, maybe 6% as the Fed raises rates, and Americans aren't going to be able to take it. In which case, Wall Street is front running this and revising their earnings estimates down. And I think the most recent earnings estimate was revised down about 5.5%. So if we're trading at about 17 times forward earnings, well, what happens when earnings estimates go down another couple percent? Well, maybe we're trading at 20 times forward earnings, right? So I think we're gonna have to keep our eye on that. And I've always reverted back to the number one saying, you know, what does Paul Tudor Jones, Stanley Druckenmiller, Ray Dalio, what do all of these guys say? And they say, don't fight the Fed. And right now, we are in a tightening cycle. Hey, Clarence is here. What's up, Clarence? This is Tom. Paul Tudor Jones stated in May that this is one of the most challenging periods ahead for the Fed board in history. I never forget those words. Yeah, well, I agree with him. I mean, think about it. Interest rates have been artificially suppressed for so long, and global debt is just indescribable. It's gotten way out of control. So back in the day, yeah, Paul Volcker could raise rates to 20%. You know, we have 20 times the debt now. So sometimes I can catch myself coming off that I'm just dumping on Fed Chair Jerome Powell, and I'm saying, hey, he's doing everything wrong. And I sort of like to take a step back and say, look, it's not all his fault. It's the fiscal side of the house too. You can't expect fiscal policy to run rampant, print all of this money, and expect no inflationary reaction and then just blame the Fed. I think that's a little bit disingenuous, perhaps. But in Stanley Druckenmiller's interview, the interview that I put in the link, he sort of was saying the same thing. He was sort of saying the same exact thing. So this is East 40th Street. We are overlooking the Grand Central Terminal. It looks beautiful tonight. And maybe if we have time, we will take a little bit of a walk through Grand Central. Shadow shocks is 100% correct. Fiscal is causing inflation. It's the government's job as well. Yeah, I think we do need to share the blame. And look, everybody, I understand. And I'm one of those people that, you know, I'm all for ending the Fed. I tend to be more libertarian in nature, more laissez-faire. But at the end of the day, it's not all Fed Chair Jerome Powell's fault, or even the fault of the former Fed presidents or the Fed chairman. You know, under Donald Trump, we spent like a drunken sailor. We sent out all these Trump bucks to everybody. We did the same thing under Biden. We got a round of Biden bucks. And there's going to be ramifications for that. And I think we're paying the piper right now. And I think it's disingenuous to say, oh, Fed Chair Jerome Powell is a bad guy because he's trying to kill off inflation. Now, the other argument on Wall Street comes from some of the fund managers I respect a lot, like Dan Tapiero. And Dan Tapiero got his start under Stanley Druckenmiller. Now, I don't agree with his take, but I think he's way smarter than I'll ever be, more successful than I'll ever be. So I always listen to him. And what he says is that, look, a lot of this inflation is caused by the pandemic, caused by the supply chain disruptions, by all these shortages. So by raising interest rates, it's not going to do anything. To which I say, I get that. I understand that. But what would you rather do? Just do nothing? And send people all of this money and tell everybody to stay home and let inflation ramp even more? You have to do something. Because when you raise interest rates in this environment, it's going to cause something that's called demand destruction. And yes, that's going to lead to unemployment. It's going to happen. But I think you have to put yourself in the average American's shoes and sort of get your frame of reference out of the, I'm a billionaire hedge fund manager, right? Because you can afford to live in an environment with 8% inflation, right? You probably have hundreds, if not hundreds upon hundreds of millions of dollars in the bank. However, the average American probably doesn't have hundreds of millions of dollars in the bank. So if their food is going up at 1% month over month, 12% year over year, and real wages after inflation are down 2.8%, well, how is that sustainable? These people are going to starve. So you got to do something. So that's sort of how I like to reframe it, because there's a lot of people in America that live on fixed incomes, and especially if you factor in inflation, you're actually making less money. So how are you going to afford if your grocery bill goes up 15% a year? How are you going to afford if it costs you 30% more every single month to put fuel in your gas tank? You're going to need a reset. You're going to need this inflation to be killed. And the only way it's going to be killed is if we let the Fed raise rates and let rates normalize. Anyway, so we are now outside of the beautiful Grand Central Terminal. But my favorite part about Grand Central is this beautiful view of the Chrysler Building. And if you guys are enjoying this live stream so far, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams roughly 5 days per week between New York City and Miami. Austin city limits his food bills hurt. Yeah, I think I said this a couple times on tonight's live stream, but the most unbelievable thing for me is when I walk into the grocery store and I buy, a little cup of about a little under a pound of fruit, like mixed fruit, berries, things like that, and it's $15. I'm like, oh my God. I'm like, that is just insane. $15 for a pound of fruit. If you go into like the Whole Foods or Trader Joe's and you get the pre-sliced fruits, $15. I'm like, that's not sustainable. That's just ridiculous. Hey, L Twist is here. What's up? Says Chrysler Building is my favorite building. It's one of my favorites too. Bot is here. She's just read a news headline that Taiwan lobbying European Union for sanctions on China, and US is also on it, says Bot. Well, one of the things that's interesting, we got some news, and on this news, Nvidia and AMD got clocked. Now, this is where I actually agree with the Biden administration. I think the Biden administration is doing the right thing here. And you guys know, I tend to lean more conservative, but I think I am fair. I think I'm fair. I think I call it fair. So this is something I actually agree with the Biden administration. I think this is a good call. To restrict the sales of precious and very sought after chipsets and semiconductors to parts of China. I think that is I agree with the fact that that is potentially a national security threat. So I actually think the Biden administration is doing the right thing there. I actually think that's the right thing to do. And I actually think that potential, oh, the door's locked. I actually think that move in the stock was a little bit overblown, because if you think about the revenue or the percentage of revenue that happens in China, it's about 4% of overall revenue. So it's almost insignificant. Dan Zanks is a Chinese-born American who was born in China. I agree with it too. Yeah, and then it's nothing against the people of China. It's just there's nefarious actors in the government that could use these things to spy on, you know, their own people or anybody. It's so I give the Biden administration 2 thumbs up for that. I think I'm fair. But hold on, let me show you guys the ceiling of Grand Central. This is one of my favorite parts about Grand Central. So here's a little bit of a fun fact, and I think you guys are probably sick of me telling you this. If you look at this little black dot right here, I'll zoom in on it. This is actually how the ceiling at Grand Central Station used to look. So back in the day, you were allowed to smoke cigars, smoke cigarettes in Grand Central Station, and all of that nasty tar would fly up to the ceiling and stick there. And once they cleaned it and restored the ceiling, they always left that little black dot to remember what the ceiling actually used to look like. I know Fred X loves that story. Jared Kobe's, this is the purple lighting new. I think it may be new. It's actually a good point. Hey, Kings 999, good to see you. So we'll take one lap around Grand Central and then we'll head out. I think this is, maybe I'm a little bit biased here, but I think this is the best train station in the entire world. Again, I may be biased, but I think it is. Sonny D says, is that light for the Queen? It actually may be. That's actually a good point. You know, when the Queen unfortunately passed away, so my condolences to all of our friends. The Empire State Building was actually lit up really nice, and we were doing a live stream that day, and I think it was probably my top 5 color schemes on the Empire. Hey, photos from around New York. Good to see you, my friend. CT says you are not biased. You're correct. Is it possible to be biased and correct? CT, always a pleasure to see you, my friend. J22 says, thank you, Tom. Good night, all. Thank you for joining tonight, Jay. Hope you have a great middle of the week, Wednesday already. One of the things that I always think about is back in the day, people would come up to these ticket sort of windows here and actually purchase their tickets. And look at how many of them there were. Now everything's just all online. I don't even purchase physical tickets anymore. I just download the application and buy it on there. Hey, Tom Conway says, hey, Tom, just tuning in where you're at. So we are at Grand Central Station. We actually started off on the corner of Canal Street and Broadway. And tonight we were talking about all things inflation. We obviously got a hotter than expected CPI number, as well as a core CPI number. And we also talked about analysts on Wall Street across the board are revising down their earnings estimates for S&P 500. And as of right now, or as of time of shooting this video, the S&P is trading at 17 times forward earnings, which is actually below the average. So technically, if you were just to buy the market right now, technically speaking, you would be buying it below the historical forward PE. However, I understand the only caveat there is, what if earnings come down materially? Well, then maybe the S&P is actually trading at 20 times or 18 times. So I think it all depends on just how resilient the American consumers are going to be. And I think Home Depot's earnings report was the most notable, because the chief financial officer of Home Depot came out and said that they were so surprised of the resiliency of the American consumer. And Home Depot had a record quarter, both in profits and revenue. All right, hopefully you guys enjoyed that. Hey, Jonathan Richards is joining us. Jonathan, good to see you. Welcome. Jonathan's like, Grand Central Station is my second favorite New York City building. So they were actually going to demolish Grand Central Station. Thank God they didn't do that. I think one of the most horrible things this city has ever done is tore down the original Pennsylvania station and then built that disgusting Penn Station. But I think they may have redeemed themselves with the brand new Moynihan train station, because that is beautiful. That is something that Governor Cuomo, I give him credit for. I don't give him credit for much, but that is a very, very nice train terminal. Very nice. So this is the Chrysler building as we are standing right under the One Vanderbilt. Hey, Andy is here from South Korea. Good to see all of our Korean viewers. Welcome. Seaburger says, Tom, thoughts on a financial crash on September 20th? That is what I'm reading in the headlines. So I don't know if you can predict a stock market crash or a stock market rally on a specific day. Now, the only reason why I haven't seen any of those articles, first of all, if you do have one of those articles, can you please drop it in the chat? But the only way I could think that people are saying that is because the FOMC meeting is next week. I believe on September 20th and September 21st. So that is probably when we will be getting the change in monetary policy. So after the egregious CPI report today, we're probably going to get a 75 basis point rate hike. However, I wouldn't be surprised if we got a full 100 basis point rate hike or a full percentage point. So maybe that's why they're saying that. NNB 045 says demolish it, no way. It should be enshrined. Yeah, so I think this was a very long time ago, NNB 045 to be fair. But yeah, thankfully they didn't. So now we are overlooking the Salesforce Tower all the way in the background. And Salesforce is publicly traded under the ticker symbol CRM, which is very fitting for the building and the company because they sell customer relationship management software. Hey, Alex says, good evening, Tom. Love to see you live streaming. How high can interest rates go with debt so high, in your opinion? That is the $1 million question. So I'll tell you what consensus is. Consensus is that interest rates, or the Fed funds rate, is going to go to 4%, 4.25% Q1 of 2023. That's consensus. I think it's going to get there. Bill Ackman also thinks that's exactly where it's going to go. I told you guys to check out that interview, that CNBC interview with Bill Ackman. He thinks it's going to hold around 4%. and probably waver around there for a year. If we continue to see these core CPI readings like we did today, it's going to have to go a lot higher than that. However, if they do go a lot higher than that, they're definitely going to break something, and the bond market is going to implode. And if the bond market implodes, the issue with that is pretty much the world ends, right? So I don't know. I really don't know what's going to happen. I think rates are probably going to hold around maybe 4.5% to 5%. Let me cross the street here. I think next year you're probably going to see rates 4.5% to 5%. Maybe Q3 or Q4 next year. That's what I'd say. And if that's the case, that means a 30-year fixed rate mortgage is probably going to be what? Maybe 8%? But I mean, what do you guys think? If you had to guess, this time next year, let's say if we're doing a live stream, I don't know, let's say September of 2023, where do we think Fed funds rate is going to be this time next year? I'll say 5%. That's what I'm going to say. I'm going to say 5%. So this is the Stephen Schwarzman building here, or the New York Public Library. And Stephen Schwarzman, obviously the founder of Blackstone, made the majority of his money in LBOs, or leveraged buyout deals. Very successful guy. Whoa, Mike Cease is 6%. Okay. Alex is 4.5. Buffalo 20s is 5.5. Wow, GN Workstation says 0. I like the contrarian take, GN Workstation, and you may be right. So GN Workstation, you think they're gonna have to cut aggressively. Flats Max is 8%. Okay. Road Dogs is 7.5. Wow. GN says we'll be in a recession, in my opinion. So I think we're in a recession now. But again, I don't really, to your point, I don't really think there's a point in arguing recession or not, because at the end of the day, recession doesn't necessarily mean like the world's gonna collapse. I think we've been so ingrained into thinking that, oh my gosh, if we have a little bit of a downturn in the market, the Federal Reserve needs to come in and save the day. You know, markets can correct, so. Shadow Stocks, as Kathy Wood is forecasting deflation. Yeah, well, I mean, until we see it in the CPI, it's not materialized. The biggest thing is shelter costs. That's like number one. And I think that may be solved, or that may be just starting to get solved in Q2. Because with real estate, usually the effects of interest rates take a little bit longer to ripple through that particular part of the market. Because with equities, at the end of the day, these are just pieces of paper, right? So Wall Street can re-rate these equities in a minute and just dump a bunch of stock on the open market, right? And that's exactly what happened with a lot of these tech stocks down 70 or 80%. But what do we always say about real estate? You have to think about liquidity. Right? So if you remember back to your Finance 101 class, and the professor stood up at the front of the room and said, all right, let's review what a balance sheet is. What is the first thing your professor said? He talks about the order of liquidity. Right? So the things on the balance sheet are in order of liquidity, or how fast you can convert that to cash. Right? So you have your cash, your marketable securities, cash and equivalents, and then you have property, plant, and equipment, so on and so on and so on. So I could log on to my Charles Schwab account tonight and liquidate, however much stock I want. But if I want to sell my house, I got to list it, I got to show it to people. It's going to take me, probably about maybe 3 to 6 months to convert that to cash. So it's not a liquid asset. So usually the effects of interest rates take a little bit longer to hit the real estate market, just because it's not as a liquid market as, you know, let's say the US equity market or something like that. Austin City Limits, Fred X is here, good to see you. 3T3 says, I was in New York this weekend, walked 16 miles on Saturday. Love that, man. Got to get the road work in. I'm a huge, big respect to that. Big respect. Mike says, was Elon smart to reduce the workforce by 10%? Yeah, I think so. I think all businesses are going to have a little bit of a shedding in headcount. Seaburger says, sorry, Tom, I don't have a link, but can tell you it was from Zero Hedge. It was titled, Warning and Prepare for a Big Crash on September 20th. Yeah, so Zero Hedge, I do respect Zero Hedge a lot, but if you only consume Zero Hedge, you're never going to get out of bed in the morning. I mean, that is all fear. It is all, you know. But look, I mean, maybe they're right. But if I had to place a bet, do we think the stock market's going to crash on this specific day? I mean, I don't think anybody could really say, oh, on this specific day, you know, we're going to have a huge move in the market. I just don't think it works like that. Maybe, but I don't know. Hey, Daniela Baca says, walking the streets is the only way to see New York City. I agree with that, especially during the spring, summer, and fall. Maybe in the winter, it's a little bit harder, but Daniel, good to see you. Thank you for joining, Daniel. Penelope is here. Good to see you, Penelope. Shadow Stocks is Sam, CFO of Crazy Eddies, walks 10 miles a day, and he's 60 years old. We'll probably live to 100. Dan Zhang says, Tom, China just rolled out property policies to help people to buy properties easier in order to stabilize the housing market. That bubble is going to pop soon. They are just adding more air to the balloon. Well, I can't say you're wrong, Dan. You know, one of the things that we've been monitoring closely here is the Chinese commercial paper market as it states. And, you know, I think if we were ever going to have a black swan event, it would show up or it would start in the Chinese commercial paper market. So I think you make a good point. We are now 42nd Street. We'll cross this way. A lot of people out on a Tuesday night in New York, tons. Mike C says, is anybody else getting nonstop political ads? It's nonstop Florida for the governor's race. I am getting hammered with not only political advertisements, but political text messages. I just got a text message today. It said, hey, Joe Biden here. I need $10, something like that. I got one for Trump. I get them for everybody. You know, now, granted, I don't know if these are just outright scams. They probably are, but I think political advertising is getting super aggressive. I get text messages, I get phone calls, I get everything, man. I've been getting lit up with text messages specifically. John says it's probably a scam. Yeah, it's probably a phishing scam. But then again, I do get the emails too from like the Biden administration, from Trump. I don't even know how these guys get my data. I mean, they probably bought my data from somewhere. Yeah, CR's like Donald Trump asking for money. Yeah, I get hammered. I get hammered by him. I get hammered by all the political people. And I never, ever, ever gave anybody my email address, but for some reason, both the Biden administration and the Trump administration have it, and they always are hitting me up for money.
Good. Thank you. How are you guys? Okay.
Yeah, John is like, be careful with the scams. That is true. So those particular scams are called emotet. They're like those phishing emails. Oh, GN Workstation says it's probably because T-Mobile was hacked. You know, you're probably right. T-Mobile was hacked, what was that, 2 or 3 months ago now? Yeah, so they buy all of this data from like third-party websites, and they use it for like email marketing and texting, cold calling, all of that. Yeah, Paul Tricky's like, never click on them. Shiva says, Tom, there's so many scams going around, but if anybody gives money to Trump, you're a total moron. I would extend that statement further to say if you give money to any politician. I mean, especially, a lot of these politicians are multimillionaires. They could fund their own campaigns. Speaking of a little bit of an interesting chart out of Reuters. So Reuters put out a chart today of the average age of a politician. I think eclipsed 73 years old is now the average age of sitting congressmen, I believe. I think that's it. Either it's congressmen, I believe. That's crazy. I think we need term limits. Anyway. I'm going the wrong way. We need to head back down to 34th Street. Kings 999 says, Tom, I will never give a dime to a politician ever. Same. CR says, Don Trump is a politician. I guess, I don't know. Dan Zhang, good to see you. D says, I agree, Tom. Psychic says, vote for Tom. Never, 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 please. I would never go into politics, oh my God. That I could promise you guys, I will never go into politics. So as we are headed towards the conclusion of the video, we'll quickly review all of the numbers and then we'll call it a night. I totally lost track of time and we are now up against the 2-hour mark. So in conclusion, everybody, that headline CPI number came in at 8.3%. Consensus on Wall Street was for an 8.1% reading. Month over month, it increased 0.1%. On the core side, so core CPI, which is the most important that we need to look at, increased 6.3%. On a month over month basis, core CPI rose about 0.6%, which now in turn means that the Federal Reserve is going to get super, super aggressive on raising interest rates and probably unwinding their massive multi-trillion-dollar balance sheet as well. So remember, don't fight the Fed. However, also do not get too pessimistic. In times like these, and especially on days like today, when the Dow Jones Industrial Average is down, getting clocked 1,200 points, the S&P 500 is down 4%, it's very, very easy to get too pessimistic. So you always want to lean bullish on the market, but that doesn't necessarily mean you need to act bullish or buy or take on risk. But you need to be prepared at a moment's notice for this market to turn, okay? So never get too bearish. Always stay in tune, but also don't fight the Fed. And that is all the time we have for tonight, ladies and gentlemen. We will be back live streaming tomorrow at 8:30 p.m. I want to thank everybody. I believe on this live stream we hit 20,000 subscribers to the channel, which is just unbelievable. So I want to thank everybody for being here. This This live stream podcast, whatever you want to call it, is a blast. I've been learning a lot. Hopefully you guys have been learning a lot. I think we're making some great connections here on the channel, some great friends. So thank you as always for that, everybody. If you're new here, feel free to leave a like on the video and subscribe to the channel if you are new. If you want to sign up for that free investing newsletter that I write, feel free to scan the QR code and you will be constantly updated with my thoughts on the US equity market, emerging markets, fixed income, and the like. So thank you, Blues Writer. I appreciate you so much. FredX, thank you. Sam, appreciate it. Dusty Cole, have a fantastic Wednesday. FredX, Photos from around New York, Andy, thank you so much. All of our moderators, by the way, too. So Sunshine After Rain, everybody, Photos from around New York, all of our moderators, thank you for keeping the streams appropriate for all ages. I know sometimes we battle spam bots and things like that, so I appreciate it. You know, we want this stream to be a place where everybody can come, hang out, express their ideas. All right, that is all time we have for tonight. So the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. We will be back here live, 8:30 p.m. Eastern Time, for another episode of Walks on Wall Street. Make it a fantastic middle of the week. Get after it, attack, rip its face off, do whatever you got to do. And I'll meet you guys right back here to regroup tomorrow.